Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. Where do we go from here? This is an obvious question that a lot of day traders are asking, a lot of investors are asking, a lot of people holding portfolios and looking to hedge or add to positions, maybe get better prices. These are all the questions, and we're going to do the best that we can by getting into the charts and doing technicals and trying to figure out where the possible bottom to this correction, because that's what we're in right now. This is an obvious correction. It's not just for the US market. The global market is also correcting, and it's not just, stocks. Bitcoin is absolutely crashing this weekend. So I'm going to show you guys a couple of things. It is, before 6 a.m. on a Saturday. I've been up for about 2 hours so far. Those of you that have followed me for a while know that I am a morning person. My body is so used to waking up early that even when I'm not working at my business and, it's the weekend, I'm still up early. And what better thing to do than log on to our trading platform and start to get into the charts. So hit the thumbs up for the research. I'm really trying my best to help you guys, especially if you're new traders. You probably have not seen this before. So I have. I've seen this multiple times. This is something that is super healthy for the market. So you're going to see these corrections. The market doesn't just go straight up and do these little, 3% pullbacks. This is a full-blown market correction. All right, so let's get into it. And I'll share my screen with you guys here right now. But yes, I do appreciate if you guys hit that, thumbs up for the video. It definitely helps the channel out. So I want to look at the tech sector first. This is the NASDAQ. So the QQQ is an ETF that follows the NASDAQ market. Now, I want to show you guys something that's pretty interesting. And we're going to get to these lines, what they mean, what I did this morning. We're going to get into that in a second. But I want to pull up here. This is the daily chart. So this is one day. So each one of these trading bars here is one day, one full day of trading. The RSI. This is the relative strength index. When we crashed in March, and I'm just going to try to make this a little bit bigger. When we had this crash in March because of 2020, because of coronavirus, the RSI hit a low down here of 25. Guys, take a look where we are right now. We're at the exact same level on the RSI. Look at this. We haven't seen this low on the RSI since March 2020 during this massive market crash. This is an extremely low RSI reading. Now, these are oversold up here. This is the way that you can use RSI. And this is this is overbought up here, correct myself. And this is oversold levels. Every time we came down, to the oversold, we would come back up, and that's where we would basically find a market bottom. In this case, we're at previous March 2020 lows. I mean, just crazy, crazy drop here in the overall market, especially the tech. Tech has gotten crushed. Now, people are trying to correlate that to, which it's, half true, but the rise in the 10-year yield, going up and hitting a high of just about 1.90. Yeah, that can send the tech shares down a little bit, but this is something totally different. This has nothing to do with the 10-year treasury. This is a correction that the market was anticipating, waiting for, needing. Um, we haven't had a real correction in a long time. So the market needs that. Look where we were trading pre-pandemic on the Qs at 239. 239. We're still at 351. That is a massive, massive move. During normal years, you see, this type of gain. You don't see the market go straight up like this. So this could have a little more pain attached to it as far as a correction. Now, if you've been following markets, you knew that eventually when a market starts to do this for this long, where it kind of stalls, there's no more buyers up here. So the only thing that can happen is it starts to correct and gets down to lower prices to bring those buyers back. Where is that going to fall? I really believe that during the earnings season for tech, which starts this week, we have, I think, Apple, Tesla, Microsoft, these big names. And then the following week, we have, the AMDs and the PayPal's, Facebook's, all those other ones, Snap. So I really believe that investors are waiting to see where the valuations are going to start to look. And, last year in 2020, earnings didn't really mean much. The price to sales, all these stocks, historical levels, we are so inflated on the valuations. Even Apple, even these great companies are historically extremely, extremely expensive. So that's why you saw a lot of stocks that have absolutely no earnings just crash off their highs. Some of the better stocks like Microsoft, Apple, they've held up a little bit better. It's going to be, like we said all year so far, a stock picker's market. You're not going to want to be in these, garbage type of stocks. So we have earnings, tech earnings, going to be in full blown mode next week and the week after. This is where I start to think that we could start to bottom out eventually. Once the earnings come out, once guidance comes out, then investors, institutions, big hedge funds, they're going to start to come up with a new, and the algorithms, they're going to come up with a new formula for what is a good value for a growth stock. And with rising interest rates and rising yields, that's when you're going to start to see things start to bottom off. Right now, we're just in a free fall. There's no point in buying yet. You're at that catching a falling knife area. Do not want to buy now. You do not want to buy when you have candlesticks that look like this on the daily chart. It's just not good. Even if you get lucky and catch the bottom. Let's say you bought Friday and then all of a sudden we bounce. That's just not the way to do it during a correction. So where are we at right now? This is what I mapped out a little bit this morning. I have the 200 moving average. We're far below now, so that doesn't even matter. This was something that a lot of the smartest people, by the way, if you watch, the news, CNBC, make your own mind up, because half of them say one thing, half of them say another. The 200 was going to be the bounce, broke right through that by a mile. Now, what are the levels we're looking at? The things that I came up with are 15% correction zones and 20%. Going back to when the market is in a free fall, that's where you will usually see, because we're past the 10% on NASDAQ, that's where you would usually see some kind of bounce or a bottom try to form. So that's why I put it here, just so we know our levels. So 341-ish around there is 15%, 321 is 20%. If we do come down to there, I just like you guys to know where we are at. So if we look at, and that's the QQQ, taking a look over at the S&P 500, I have done the same thing for you guys, just trying to map out where we are. Now, once again, going back, you can see the crash in March, coronavirus, 2020, the RSI. Whoops. Always do that. Taking a look at the RSI, 18 it hit in March. We are at 26. The only time we were below that was March. So you guys can see how huge of a sell-off that this is. This is almost 2 years ago. We have not seen levels like this on the RSI. Just incredible. Absolutely incredible how violent the sell-off is. And I'll show you guys on the volume. The volume was crazy on Friday, which is not a good sign. But that was really, what a day. Incredible. So I mapped out here the 200 moving average on the SPX, which, like I said, is the S&P 500. Things that I've noticed. Right here, we had some support. That happens to be at a 10% correction. Okay? So that's going to be at 4,300. That's 97 points from here. That will be a 10% correction on the S&P 500. If we break that, we have a 15% zone here at 4065-ish, call it 4100, somewhere around there, and we have seen previous support at that area as well. This is all we can do at this point. You might see some bounces. They're called dead cat bounces, where you'll get some bounces up one day, it'll look good, and then they'll pull the rug on you and it'll continue to go down. It kind of happened right up here on this day. So, we just have to keep that in mind. So that's the SPX, and I'll look at the SPY for you guys. I know a lot of you guys look at the SPY. Same thing as the SPX, but what you can see on this one is look at that volume on Friday. Incredible. Incredible selling volume. Increasing selling volume. Just not great. When we were having this Santa rally, it was based, like we were saying back then, on not strong market structure. There was no, real buying. And you can tell by these low volume bars here and the decreasing volume. This is increasing sell volume, which means that this is a lot more legit to hold up than something like that Santa rally that we saw for 5 or 6 days. We knew at this point, and then it starts to stall out. We're in Discord, we're warning everyone, and then we start to, drop. So these are the areas on the SPY that I've noticed. You guys can, take a screenshot if you want, but the 10% on this is around 433 was my math, and then 430. We've seen some support here, like you saw on the SPY, the SPX that I showed you. There's some support down here at 426. So there's a little bit of a zone here. If that breaks, we have 15% down to about 405. And that is previous support around here. We pulled back, came up, pulled back. So that would be 405. That's about 15% down from here. That's a massive, massive drop. I'm not saying that this has to happen, but you need to know where this stuff is. Now, we closed below the 200 moving average on the SPY. This has not happened since we were under it. I mean, you're in you're in uncharted territories, especially if you join the market, in 2021. This is probably looking really crazy to you. I want to tell you though, while it's, a lot of selling all at once, corrections are healthy. 10%, 15% corrections are healthy, very healthy. Once you get to 20% and over, that's a bear market, and that's not good. So this is where we're going to want to see some of these bounces if we do continue to sell off. So that's the SPY. I don't know if I showed you guys this yet. This is the ES. This is something in Discord. A lot of traders. This is something that we watch. This is the S&P 500 futures. This is also something that I trade actively. What I see here is the same thing that you see on the SPY and on the SPX. This is where I see the 10% correction zone right here. We have previous support, and maybe that could be a bounce. You can see the volume, the RSI, all the same like you saw on the other markets. Now, we closed under the 200. And in last week's video, we had this green trend line here. We had support, and we were coming back to support, and then this is the 4 trading days. So at this point, if you remember in my video last week, I said we're at a very critical level in the market. I noticed a lot of stocks were at that trend line, and if we broke it, we could really, really crash hard. And this is exactly what happened. So, in our community, in our Discord community, this is all we talk about. We go through the technicals, and everybody is well aware of the potential for certain things like this. So that's just why I really, really think, trading in a community can really help you guys out a lot. So that's the SPX. That's the S&P 500. We went through the Qs, and I just want to show you guys here a couple of things. So actually, this is what I want to show you guys first. This is the 10-year Treasury. Now, for all of those that were saying the reason why the stock market's crashing is because the 10-year Treasury went up to a almost a 1.88 or whatever it was at the time. It did make a quick move, and that could rattle markets a little bit. But I want to make this clear. This is a correction that was needed to happen. There's going to be a lot of people telling you why things are happening. In my mind, the Fed raising rates and, turning more hawkish back in November of 2021. That's when we started to see, all those high valuation stocks get, cut in half. That is when, and that is why we've seen that sell-off in the tech market. The 10-year Treasury, look what it did, guys, on Friday. It went from, first of all, from the beginning of the week, 1.89, it has gone nothing but down in this 5-day chart. Even, going down a huge amount on Friday. So then why, if we think that they are so correlated with the overall market, then why would the NASDAQ in the last 5 days chart look like this? A complete tanking. The 10-year Treasury went down. Why wouldn't the NASDAQ, if that was true, the NASDAQ should have went up? So just watch what you listen to, watch what you hear. This is a correction. This is just something that happens. It doesn't have to be, based on a 10-year treasury yield or anything like that. This Bitcoin, look at what Bitcoin has done in the last 5 days. This is a global sell off. This is a sell off of every asset class. There's nothing escaping this type of stuff. So, the 10-year, yes, you could keep watching the treasury yields, of course, but just know that this kind of stuff, once it starts to happen, this is a correction. Look at Bitcoin, guys. 34.8 right now. 34.8. The lowest it's been is 30,000. And that was where it bounced twice over the last year. So we'll see if 30,000 holds up on Bitcoin. And then on the economic calendar, these are things I like to share with you guys so we know what to expect. On Wednesday, we have the Fed chair, Jerome Powell, on Wednesday. It's FOMC, so be aware that this week especially can be extremely tough to trade. I recommend wait this out. The market is not going anywhere. You don't have to trade every single day. I really, truly mean that. Watch the market. Do some technical analysis. Do some paper trading. It's just not worth getting chopped up. The algorithms, I mean, you guys saw on Friday because of options expiration, the algorithms were insane in the market. Just crazy. And this is Thursday and Friday. This is all stuff that I'll post to our Discord members, amongst a bunch of other things this weekend. So that'll be over there. And I think just one more thing I want to show you is the VIX. The VIX at 28. That is very, very high. Very high. When this broke over 20, so it started to settle back down. It hit 17, and then it went to 18, 19, and then it broke 20. Never a good sign. And now we're at 28. When the VIX is up there, and it's something that I tell everybody in our green bar trading community, that's where you're going to see the really, really big moves. Anything that is over 20, it's going to be up, down. I mean, good for scalp trading. I actually had a nice green week. A lot of people were really red this week. You have to know how to get in and out really, really quickly. So this week coming up, we have FOMC. We have Powell on Wednesday. We have tech earnings. We have a market in full-blown correction. So everyone out there watching this, please, I'm begging you, manage risk, follow rules, and just don't trade. Okay? Wait for things to settle down a bit, and that's when I would recommend that. But we have our levels here. We have what to watch. That's the best we can do at this point. It is going to be a massive, massive fundamental type of week this week, not just technically. So you have a lot of things to look at. Hopefully you're doing what I'm doing, and hopefully this video helps in your research as well, because that's why I do this, so that you guys can see what I look at, and so that we're all well prepared together. I really want new traders to know that a correction is healthy. This doesn't mean that the stock market is done. This is normal. You don't want to go over 20% of a correction. That's a bear market. You're still in a bull market. It's just a market in correction right now. So hope you guys enjoyed. Hit the thumbs up if you're new. Subscribe, and that Discord community will be linked in the description for you guys if you want to join our trading community. Take care. Everybody have a great weekend.